know their owners pretty much. The first person I have on my list here is Seye Olowokere. Seye is a chartered accountant, a seasoned one with over 14 years of experience just around tax filing, prepping, bookkeeping, all those accounting stuff. Wow. And then he has consulted and worked across several industries, ranging from financial services, manufacturing, power, and oil and gas. Wow. He's got his, income tax training from H&R Block, and he's got years of tax working experience with the same firm. And that kind of attests to the fact that, the speakers we bring in here, they are not, people that just learn maybe via YouTube, right? They are seasoned, speakers. They've got a very solid background. So that's exciting. Something everyone should know about Seye today is that it's very passionate about helping individuals and small businesses, especially, just optimize their tax deductions so that way they can build sustainable wealth. And I think that's very key. All of us here in Canada, I'm sure we don't just want to walk the walk, right? We want to take home money at the end of the day, right? So it's always nice to have experts in the house that can help us understand how to maximize, opportunities that kind of come our way, right? So that's Seye in a nutshell. But something we also should take note of today, Seye is going to be speaking to how to use modern tax strategies to reduce taxable income and at the same time maximize our tax refunds, right? And in particular, it will be nose diving into how businesses can optimize tax deductions, while building sustainable wealth at the same time. So that's good to know. I'm excited. I can't wait to, listen to how I can get enough money back from the government this season, right? And I'm sure a lot of us on the call can also kind of resonate with that as well, right? So our second speaker for today is Tolu Lokpe-Owate. We call him Tolu. He's a very seasoned accountant as well with over 15 years worth of experience. Tolu has got range here, but something in particular is very result oriented. It's flexible, and I'm sure maybe when we listen to him on the call today, you can also tell, right, from what is the kind of content he's going to be delivering today as well. Tolu is an adaptable team player. He likes to see solutions and possibilities, and at the same time seeks to be outstanding by collaborating with people that have a very strong desire and passion to learn and grow. Wow. So Tolu has, a lot of feathers on his hat. From being a chartered accountant, he's also PMP certified. He's got CBAB. He's got, the PSM. He's got product owner. Tolu, is that something you don't have at this range? He's got everything. Wow. So we're excited. We can't wait to listen to what you've got for the house today. It's got international experience in project management and finance, just focusing around accounting and auditing, and is good around organizational strategy development. Today is going to be walking us through pretty much how Canada federal income tax for individuals, how that works, right? So, and then it's going to be speaking in particular to how we can benefit with the aid of some of the tax laws that, we currently have in the system. And I'm sure a lot of us, we don't know what we don't know. If you're like me, I'm maybe speaking for myself. I don't know what I don't know, right? It's those things I see on Google or maybe YouTube, I kind of, leave off. But then again, it's always good to have experts in the house that helps us, extra these things. So we get to know all those hidden gems that we can capitalize on, that just going to help us stay financially fit at the end of the day. I know I've said a lot today. I'm trying to be mindful of time so that way we can have enough time at the end of the day for Q&A. Because I'm really excited and I'm looking forward to that. And I know a lot of us have got our questions on standby. So I don't take much of the time. Tolu, if you're all set for us, if you don't mind, if you go ahead to share your screen. Tolu is our first speaker for today, and he's just going to walk us through what he's got for us for, about 30 minutes, and then Seye, the second speaker, will take over and then just help the business folks in the house understand how, they can optimize tax deductions and, build sustainable wealth while at that. Tolu, yeah, if you want to unmute yourself, take it away. Tolu, can you hear me?
Yes, I can hear you.
Awesome. Okay.
One of my greatest challenges is technology. Unfortunately, I've worked in the technology space, not like it's a challenge though. Give me a second, please. I will stop sharing, then I will try to share again. I just had a little itch.
That's okay. So if you want to move your camera slightly, at some point we're just seeing half of your head. We want to see who Tolu is so we can stop you on the road and tax you.
That was on purpose. I was trying to hide from people. Just kidding. So are we good, Temi? Which of the screens can you see?
I can see your main screen, and I can see the next slide as well.
Okay. What about now?
I'm guessing this is the presentation.
Yes, is that what you're seeing?
Yes.
Can you see the next slide?
No, I can't.
Okay, great. Sorry guys. Thank you, Temi, for the introduction. Thank you everyone for coming here tonight. She said I have 30 minutes to do this. I normally do this for 2 hours, but I will try in 30 minutes. You said everything, and thanks for the introduction. You said a little more than I am, but thanks for the hype. I like it. There was one important thing you missed to say. I am a sport enthusiast. I am a soccer referee. I used to be a National League referee in Nigeria. I also officiate games in Canada. I'm a provincial referee in Canada. So all the things you've said, I don't like them as much as I love sports, and you forgot to say that. But anyway, I forgive you for today. We will be talking about the Canadian federal income tax. And for me today, I'm going to be speaking to the part that deals mainly with individual taxes. And my friend and colleague Seye is going to be talking a lot more about business taxes. So this is myself in a nutshell. I mean, I'm also in the IT space. I do projects and I manage projects in the IT space. Interestingly, I was an accountant before I dabbled into the IT space, and the accounting never leaves you no matter how much you try to. So this is a disclaimer. This is not presented on behalf of CRA, and it's not presented on behalf of the government. Things can change. Things change with taxes before you know it, and without recourse to us, they could change everything. Every year, something new changes. So some of these things are not cast in stone. It's just an idea of what goes on. So today we are talking about taxes. A lot of us are scared of this, but the truth about it is that there's really nothing to be scared of if you take your time to understand the basics. When your tax situation starts getting a little complicated, if you are not numbers driven and you are not an accounting person, I will always suggest give it to a professional to help you. It's just like saying that when your headache becomes a little more than a headache, you need to go to the doctor. You don't have to do self-medication. There's a general misconception that we all have, and that's that, well, a lot of us have it, that taxes are meant for the rich, or taxes are only beneficial to the rich. Unfortunately, it is not right. Taxes are meant for all of us, the rich, the poor, the ugly, the bad, the good, the beautiful. The only difference between the elite is that they understand the fact that they can work around the tax laws to their benefit. So they do not take it for granted. The things they don't know, they recruit experts to do for them. We have Donald Trump. Okay, we have Trump on this call. I don't know if it's Donald Trump or not, but I want to assume it's Donald Trump. That's a fantastic man who knows what to do. That guy barely pays no taxes. But be that said, just to let us know that taxes is for everyone, all of us. As long as you are earning income, you are going to pay something. So in the Canadian income tax for individuals, there are some things that we need to understand. They are basic things. The first one is what we call self-assessment. And the second one is called progressive tax system. Now, what is self-assessment? It simply means that me, Tolu, I'm going to carry my two left legs and say, okay, the government of Canada, Canada Revenue Agency, this is what I have done. These are my sins for the year. This is the money I have made. This is what I'm expected to remit to you. This is what I have remitted. This is what I have outstanding. The bottom line is that in Canada, you are expected to assess yourself, right? After assessing yourself, you will turn it into the agency. The agency now comes back to tell you if you did a if you did a good job or not. It is at that point they send us what we call a notice of assessment. A notice of assessment is only saying whether you did a good job or not in your own self-assessment. So if you decide not to turn in your self-assessment, you probably will not be assessed. Then there is also something called the progressive tax system. A lot of us have a misconception that I don't want to work too hard because the more I work, the more taxes I will pay. Yes, that's true. That's true. But the truth about it is that the taxes are calibrated. So I am making $50,000. Okay, I'm making $30,000. I'm making $30,000. I'm probably going to fall into the first tax bracket. If I make $65,000, I will fall into the second tax bracket. And I'm going to show you a diagram. We're not going to go into too many details here because these things are not things you could get in one night. But there are several tax brackets. We have the 15% tax bracket. We have the 20.5. We have the 26%. We have the 29%. We also have the 32%. The figures beside those tax brackets are a little outdated, right? I'm sorry, but new ones are already out. But this is just to guide us. So someone making an income between $0 and $48,000 is going to be taxed at 15%. Now, somebody making an income of $60,000 is not going to be taxed at 20.5%. That person is going to be taxed at 15% and 20.5%. And what do I mean? The first $48,000 will be taxed at 15%, and the remaining $12,000 will be taxed at 20.50%. That's what we mean by progressive tax system. It's not your absolute total amount that falls into the tax bracket that is taxed. It progresses. So there are some things we need to know about filing our returns in Canada. The tax year typically runs from January 1 to December 31 each year. But we are expected to do our self-assessment on or before 30th of April in the next year. And now I'm talking just for individuals. On or before 30th of April. So right now, this is February. The tax season is opened already. So we have between now and 30th of April to turn in our taxes. And what are we turning in? We are turning in our taxes for last year, 2021. So we are filing 2021 taxes in 2022. And we need to turn the taxes in before the 30th of April. Now, 30th of April falls on a weekend. Because of that, you have a grace of the next business day. So for this year, the first business day in May is the final day. But I always ask my friends and clients and everybody, why do you want to wait till 30th of April? You have from February, March, April 1 to April 15 to do your taxes. Why do you want to wait till 30th of April? If you are owing taxes, for every day after that 30th of April, you will be paying charges. There are basically two methods of filing taxes. It's either you do the paper method or the electronic method, but I broke it down into three. You have the paper filing method. It simply means you print out all the schedules, you print out the T1 slips, you print out all the stuff, you start writing, you do all the calculations with your calculator, you finish off everything, and you send it in a mail through Canada Post, and you send it to the CRA. Some of you, I mean, I want to believe all of you on this call, nobody is doing that because you are all techie people. But the interesting thing is that a lot of people still do paper filing in this Canada, especially the seniors and the people in the rural areas. And don't get it twisted, there are rural areas in Canada as well that do not have quality internet like we do. The other two methods are just submerged into one. They are electronic filing methods. That means you transmit your taxes electronically, and we have the e-file and the net file. The difference between these two is that e-file is usually what the accounting organizations, the big tax organizations like H&R Block, Liberty Tax, that's what they use. Net file is a lesser, is secured, but is not as robust as what e-file is. So most of the net files are, most of the net files are free, and they are approved by CRA. And you can just go online, check any of the net files that is approved, and do your taxes yourself if you know what you are doing. So there are three basic components of a tax returns that we need to be aware of. It's as simple as three things: the income, the deductions, and the credits. So these are the three basic components you need to be aware of. We all know what an income is. Whatever you make from your business, from your employment, from your rental income, from your investment income, anything you are making as a form of income, we all know what income is. So the main thing we are going to dissect now is deductions and credits. What do deductions do? Deductions reduce our taxable income, and credits reduces our tax liabilities. So whatever you do, if you want to maximize your taxes, you need to increase your deductions and possibly increase your tax credits as well. How do we do that? That is what we want to focus on today. These are examples of income. I'm not going to talk about that too much. We all know what an income is. Just to let you know that there are also some incomes that are not taxable. These are examples. If you go gambling and you win a lotto, most of it is not taxable. This is the way they put it in tax laws. They say most gamblings, most winnings. The reason behind that is so that when they want to change things, it can be easy to catch you, but you are not really expected to pay taxes on some of these things here. You don't pay taxes on a gift or any inheritance. The spirit about that is that it's a gift. It's not something you worked for. It's not an income. There are some technicalities whereby some gifts can be disallowed. We will not go into that. So these are some of the examples of things that we do not pay taxes on. Then just another one, if you are a first, sorry, please can you mute your mic if you are not asking a question? Thank you. If you are a First Nation person and you work on a reserve, all the income you also make is also not taxable. But you know, let's go to what really concerns us: deductions. Now, examples of deductions: registered plans, annual and professional dues, moving expenses, repayment of employment income, Canada pensions plan. I'm just going to give a brief example. Now, let's assume that Temi earned $50,000 gross in 2021. I'm just using round figures. I know she probably is making more than that. Sorry if I'm belittling you. She made $50,000 in 2021 as a gross income. Now, it's not that gross that is going to be taxed. Before we arrive at our taxable income, we need to remove the deductions. So what does deductions do? So let's assume she made a contribution into an Rrsp. She also had union and professional dues. She also had some moving expenses. Everything amounted to about $15,000. So what that means is that she's going to remove that $15,000 from the $50,000 she made as gross income. And that is what a deduction does. So it is what is left. I'm simplifying this thing. It's not as simple as this, but I'm simplifying it. It is what is left, the $35,000 that we will now apply the tax percentage on. So these are examples of deductions that you can leverage on. Rsp, we will talk about that a bit more. Annual union and professional dues. Those of you that are registered members of APEGA, this falls under what you can use as a deduction. For those that are members of the CPA, this can come under a deduction. Now, moving expenses. What is a moving expense? Moving expense, it simply means that you are moving from one location to another within Canada. Sometimes when you move abroad, it's also qualified, but there are technicalities to that. We won't go to that. But moving expenses, before your moving expense can qualify to become a deduction, you need to meet two things. You need to have moved for at least 42 kilometers. And the move needs to be for either employment purposes or for schooling. So if you're moving for leisure just because you don't like it in Alberta, it's too cold in Alberta, and you decided to move to Vancouver, and the move was not because you were looking for a job or you got a job, and the move was not because you were going to school, it's not going to qualify as a moving expense, just to let you know that. So tax credits, what do tax credits do? Tax credits are like what we have in our bank accounts with the government, with the CRA this time around. And what do? They reduce your tax liabilities. Now remember, the deduction will reduce your income that the percentage is going to be applied on. So we've reduced Temi's income to $35,000. She now falls in the first tax bracket, which is 15%. Applying 15% to $35,000 will be, let me quickly do that calculation. 35, 123 times 0.15. That's going to be like 5,250. So it means that she's expected to pay a tax of 5,250. However, that is not what she will pay. That 5,250 will still be reduced by the tax credits she already has with the CRA. And I'm saying she already has it with the CRA. It's like a bank account. Now, what are the things that form a tax credit? Everybody in Canada is entitled to at least one. I know of that. And it's called a basic personal amount. The fact that you are breathing, you will always get a basic personal amount credit. It is not transferable, and it is not, you cannot also carry it forward. It has to be used this year. The amount changes from year to year. Now, depending on some other circumstances, you could be able to get at least maybe 4 of these 7 that I wrote here. If you are 65 and above, you will get the basic personal credit. You will also get the age amount. If you have a spouse or a common law partner who is low income, and when I say low income, I mean, there's a threshold for that. We won't go into details. You will also be qualified to get the spousal amount. So imagine that you are over 65. You also have a spouse that is low income. You will definitely be getting credits, 3 credits already: basic personal amount, age amount, and spousal or common law partner amount. Number 4 is usually for single people who have dependents. So your dependents is usually expected to be family or an adopted child, right? Other forms of credit that we might have is interest paid on your student loan. So the interest you pay on your student loan qualifies for a credit. Your medical expenses also qualify for a credit. So anytime you have your medical bills, it has to be prescribed medical expenses though, not just off-the-counter things. And it has to be what you are paying out of pocket that your insurance company has not paid for. Another thing that qualifies for credit that I know most of us Nigerians will probably will benefit from is our charitable donations. We donate to churches, we donate to mosques, temples, or religious places. Interestingly, in Canada, those organizations are considered as charitable organizations. So whenever you donate to your charity, to your church or anything, remember to collect your receipts. Let me give you a very, very interesting thing. In Alberta, you're likely to get a tax credit of almost 50% in total of whatever you contribute for your charitable donations. You get 20% in credits from that, from the federal, then you get another 30% from your provincial. Don't worry about the calculation. All I'm just trying to say is that whenever you donate to your church, remember to collect your receipt. It is, and if you are feeling bad about it, collect the charitable receipts, use it as a credit. Whatever you gain or you are able to save from your tax returns, pay it back to the church. Then you collect another receipt, then the cycle continues. The other things you might not really know about, volunteer firefighter, search and rescue, volunteer amount, those ones are very popular with the people in the rural areas. So, registered plans. I mentioned the fact that our deductions will reduce the taxable, our income that is being taxed, right? And a very good example of deduction is the registered plan. The most common one is the Rrsp, Registered Retirement Savings Plan. Now, this is a very good tax deferral tool. So if I earned $100,000, that will definitely put me in the third tax bracket, which means that I'm likely going to be paying plenty taxes this year. But because I just thought to myself, why do I have to do this? I can defer this tax. So I'm going to take some money from let's say I take $20,000 and I put it in my registered retirement savings plan. What it means is that by the time the CRA is going to be computing the taxes I will pay this year, my income that is going to be taxed is not going to be 100,000, it's going to be 80,000, because it is considered that I've put some money out for my retirement. The beautiful part about the Rrsp is that it reduces the income that you are to be taxed on presently. It also drops you down into a lower tax bracket if you are able to utilize it for that. Now, it's a deferred tax system. It's not permanent. Whenever you are going to be withdrawing this money from your Rrsp, you will be taxed. The spirit behind this is that you are saving this money for retirement and you are expected to contribute until you are 71. By the time you are 71, a lot of people will not be having that luxury of work and the plenty income we currently have. So there's a tendency that those people will be falling in the first tax bracket, which is just 15%. So even when you are taking your Rrsp from your Rrsp contribution account, you will be falling into the 15%, not into the probably the 20.5, the 26% that you must have fallen into now that you are actively engaged and actively making money. There's another thing that you can do. Every person here has what we call a tax-free savings account limit. If you don't know it, go and check in your CRA My Account, or you check your notice of assessment for your previous year. You will see your tax limit there. What it simply means is that any money you put into that tax-free savings account and you invest from your tax-free savings account whatever income you make is tax-free. So that's another way in which you can save yourself from paying too many taxes. Just put the money you want to invest, put them in a tax-free savings account and invest from a tax-free savings account. It could be mutual funds, it could be GICs, whatever, right? So I spoke about medical expenses also being some things that can get you some credits. And what are the examples of medical expenses that we will have? Dental expenses, prescription drugs, laboratory and radiology, diagnostics, premium. The premium you pay on your private health insurance also qualifies, artificial limbs, etc. Service animals, when life was still good. I take, for example, downtown Calgary. You go to downtown Calgary every day, you see visually impaired people walking about with their service dogs. Every money spent on those dogs to take care of them could qualify as a medical expense. Don't get it twisted. If you go and get a dog as a pet, you cannot claim any tax on your dog as a pet. But if you have an animal that is being used for medical purposes, every little penny or dime you spend on that service animal can be claimed as medical expenses. Now, there is another trick. It's usually beneficial if the lower income spouse is the one claiming the medical expense. The reason is there are some calculations around it. Maybe when we get to questions and answer time, we'll talk about the calculations, but it's not something you should worry about. Just know that it's a lot beneficial for the lower income spouse to be the one claiming medical expense. Educational expenses, this is just for us to know that it's available. It really doesn't do anything to our, Rsp, it really doesn't do anything to our taxes. It's just something we should know and we can leverage on. It is called Retirement Education Savings Plan. It is when you try to save money for your children's tertiary institution or tertiary education, not secondary, not primary. For every dollar you put in there, the government matches it by 20%. It has a threshold though, it's not infinite. But for every dollar you put in, the government matches it by 20%. So I always tell my friends, why don't you leverage on that and start saving for your child's tertiary institution? Tertiary institution is not cheap in Canada. So if you save, for every dollar you put, the government put 20%. The flip side of it is that by the time your child decides that he does not want to go to university, unfortunately, the government is going to take back all the 20% they've contributed for you. They are not going to touch your own contribution. They're going to take back all the 20% that they've contributed for you. If you want to know more about this, you can discuss with your bankers and they can be able to talk more about this for you, but it's something you should leverage on. Some other things that could qualify as credits for us, any interest that you pay on a student loan is also a credit. But there is a caveat. You need to make sure that you do not ever default on your payment. The very moment you default on your payment, you will not be able to claim those interests as a credit for you. Now, your tuition fee, if you're going to school, that's why you get a form called a T2200, T2200 or T2201, I can't remember. For your tuition fee also gives you a certain level of credits that you can use to reduce your tax liabilities to the government. Also, the tuition fee of your children. Now, it can be transferred to you. So when you are paying your child's school fees and the child is already 18 and above and the child is filing his or her tax returns and the child is not really exhausting and utilizing the credit, it can be transferred to a parent or to a grandparent. That's all. A father cannot transfer tuition credit to a child. It's only transferred upwards and it has to be to a family member, a parent or a grandparent. And the transfer also has a limit. I think it's $5,000 as at the last time I checked. So the maximum that can be transferred to a parent is $5,000. And it has to be transferred in the year in which the tuition was paid. If the transfer is not done in that year, it's only the child that can carry it over and make use of it in future years. I think I made it before 30 minutes. Thank you.
So when you put it that way, we're going to discuss after now. So that's fine.
I know we will discuss. Don't forget, I'm also a project manager.
No,
and
all good stuff.
And we being time conscious is very important.
Yeah, no, good stuff. But I mean, I don't know about everybody on the call, but Tolu, you've dropped gems this night, and I'm already thinking maybe I'm going to have some conversation with my husband after now. I think we need to get a service dog, right? Any way to save myself some money.
You don't
right.
need a service dog because you don't have a medical condition that requires it.
Well, I'll figure something, and that's why I'll come and meet you as my tax consultant. But
okay.
That's another story for another day. I'm actually looking at my time here, and I know we have one more speaker to go on today's call. I'm really hoping we would have enough time for Q&A, but in the event we're not able to cover all the questions, I'm going to drop an email in the chat where we can send our questions to, and the learning team will be very happy to reply some of those burning questions we have. I would pass the mic over now to Seye. Seye, if you're all set for us.
Go ahead.
I'll need to mute this person. Yeah, Seye, do you want to share your screen? You're mute.
Yeah, can you see my screen?
Yes, I can.
Okay. Yeah, good evening, everyone. I'm excited to be here.
Good evening, sir.
Good evening. Yeah, I believe you can all see my screen.
Yes, we can see it.
So the focus of my presentation will be on business, how you can maximize or optimize your taxes using business deductions. But along the way, I'll speak to some personal income tax issues. This slide is on assessing tax slips. So some of my clients, they have this issue last year, for a couple, the husband worked in like 4 different places and he did not even remember to get all the tax slips. And it was reassessed. Because the husband was reassessed, the wife was also reassessed. So we recommend to our client, to everyone we engage, to ensure that they go online to their CRA profile to view their tax slips. So normally, by the end of February, the following year, at the end of every tax year, the employer sends tax slips to CRA. CRA upload these tax slips on their website. So it's recommended that you view your tax slips to ensure that, for completeness sake. And also during the pandemic, some fraudsters collected benefits, either say benefit on behalf of some taxpayers, and CRA believe that you collected such benefits and you must pay tax on such benefits. So you can all access your tax slips on CRA website. If you're not a first-time filer, you can have access to CRA online. But if this will be your first time filing tax in Canada, you will not have access to your CRA profile. So you can get this online. Just log into your profile. Log into your profile on the sorry. So you log into your profile and you, on the middle far right, click on tax information slip. You click on that, then you can access your prior tax slip, either 2021, 2020, open the document. You ensure that you get all the documents online. At the minimum, all the documents on your CRA profile must be included in your tax filing. Now, Tolu has gone through this, but I just have maybe one or two additional information. So for tax purpose, personal income tax purpose in Canada, you are expected to report your worldwide personal income. So if you have income from Nigeria, personal income from Nigeria, you are expected to report such income. If you have rental income from Nigeria, you are supposed to report such income on your personal income tax. If you have an incorporated business in Nigeria or other parts of the world, you are expected to file such tax in that jurisdiction. But for personal income, you are supposed to add both income made in Canada and other parts of the world. Then in terms of grants, either you receive a personal grant or business grant, you are supposed to include that as part of income. Grant is taxable in Canada, but you can report the net grant. Net grant in the sense that, let's assume I receive a grant from government, the value of the grant is 5K, and I spent 4K related to that grant in carrying out that activity related to that grant. Then the net grant in such case is 5 minus 4. So what will be reported, the net grant will be what? 1K. So the government will tax you on 1K. But if you do not spend any money related to what the grant is meant for, the 5K will be reported either as a business income or maybe sole proprietor income, and you'll be taxed on that. Now, moving to business, self-employed tax filing deadline. A self-employed person is either a sole proprietor, independent contractor, or if you're into a partnership business. The tax filing deadline is June 15, while the balance owing is due April. This could be confusing. The deadline is June 15, but the balance owing is due April 30. The implication of this is that if you are owing the government at the end of the assessment, you have a balance owing, the government will start charging you interest from this date. After April, from May 1st, the government will start charging you interest. But the deadline is this date. So if from your analysis, if you envisage that you'll be owing the government, it's better for you to file before this deadline, such that in case you are owing the government, you won't pay any interest on your balance owing. This also relates to personal income tax. So this slide has both information on personal income tax and business income tax. Now, on the left side of the slide, what I have on this slide here is a combination of the federal and the provincial tax rate. So when you make income in Canada, you'll be taxed by the federal government. You also be taxed by the provincial government. But this is an average rate based on simulation. This is an average rate. So on the average, someone that has a taxable income of around 49K, the total average tax rate you will pay is 20%, combination of federal and provincial. While in Alberta is higher, in Manitoba is higher. I just picked these three provinces, which just for scenario purpose. For people that their taxable income is between this range, so for someone in Ontario, you pay like 1/4 of what you earn. $1 out of every $4 you earn, you pay to the government as taxes. So imagine someone in Manitoba is paying almost 1/3 of what you earn to both the federal and the provincial. That is why we need to be serious about our taxes. If not, you just realize that you are working and the government is taking 1/3, 1/4 of your taxes. For those that are taxable income is within this range. So in Ontario, like 1/3 is being paid to the federal to the federal and provincial government. Now, on this lower side of the slide, I have a quote here that if you are a salaried employee and you do not have a side business, either a sole proprietor, partnership, or incorporated business, you're either working for the government and the beneficiary of his system, because you'll be taxed at a higher tax rate. And the essence of your business is to reduce your taxable income from the perspective of your personal income or business income. Now, this on the far right of the slide, these are the average tax rates in these three provinces, which is a combination of the federal and the provincial tax rates. So we have what they call the small business deduction. Now, because the government realized that most of us, we have small businesses. So if the income, the revenue from active business is less than 500K, you will fall within the lower tax rates. So if the gross revenue for my business is less than 500K annually, then this is the tax rate I will pay in Ontario, in Alberta, while in Manitoba is around 9%. But if the gross revenue is more than 500K, these are the applicable tax rates. Now, in terms of how do you file your taxes, if you are a sole proprietor, the net profits from your business, revenue minus expense, the net profit from your business will be included in your personal income tax. So it will be added to your salary income to determine your taxable income. Now, in Canada, a sole proprietor could be registered or might not be registered. So if I have a side business and it's not registered, that is categorized as a sole proprietor. So you could have a sole proprietor that is registered or not registered. Then partnership, also similar to sole proprietor, it will be added to your personal income taxes. Then you have incorporated business. If your business is incorporated, it's a separate entity, legal entity, so you have to file a separate corporate income tax for your business. But if your business is a sole proprietor or either registered or unregistered partnership, you add the income from that business to your personal income taxes. Now, focusing on a modern business owner is looking at, how do I allocate the income, the expense for my business, partly or fully, my personal expenses to my business, so that they can maintain their lifestyle. So imagine someone that runs a business, maybe Airbnb business, he has like 4 or 5 rental business, and every year they go on vacation. So the plan is, how do I ensure that maybe my vacation expense, hotel, airfare, transportation, over 50% of the expense that relates to their vacation is being allocated, passed to their business to reduce the business taxable income. So like one of my clients called me, he said he's going to Florida for vacation. He has an Airbnb business, and what can he do to ensure that most of this expense can be allocated to the business? And at the end, after discussion, he agreed that, okay, while in Florida, he's going to visit another business in Florida to partner with them, you understand? And he met with them. And as far that he can support all this with the right documentations, he has the right business activities. If he flew first class to Florida with his family, but expense that relates to him, the hotel air flight was used to reduce his business taxable income. So this is what the wealthy people do. They run businesses such that some of their personal expenses will be pushed to their business to reduce the business taxable income. On the long run, the business taxable income will be reduced, the personal income taxable income will be what? Reduced. The main game is, how do I reduce my income, my taxable income? Another scenario, I have a friend, they want to renew their Nigerian passports, the whole family plan to go to Ottawa, and he asked me, what can he do to ensure that some of those expenses, you understand, that they're going to spend on traveling, rental of cars, hotels in Ottawa, traveling to Ottawa, gas, fuel, meal along the way. How can they pass some of these expenses, you understand, to their business? And at the end, based on the nature of his business, he was able to engage in business activities while in Ottawa. And I can tell you that he has the documentation that there was business activity in Ottawa during this period. Over 80% of the expenses that relates to hotels, traveling, rental of cars, will push to his business taxable income. You understand? As far as you can support it, you have the right document, and you engage in business activity while you travel to such location. So there are so many businesses in Canada you can do. The lesson here is that if you are a salaried employee, you are earning over 100K, and you don't have a side business, most likely you are just working for the government, because you'll be paying over like a third of your income, while people that are earning $1 million are paying little or no taxes. This also relates to personal income. Other employment expense. This was introduced by the Canada government during the pandemic period. I'm looking at my time. And the essence of this is, if you work from home, you can claim some work from home expenses. There are two methods to claim this, either the temporary method or the detailed method. If you use the temporary method, for 2020, the maximum you could claim was $400. The government increased that to $500 for 2021. The maximum you can claim if you use the temporary method is $500. But if you use the detailed method, there's no maximum limit. I have some of my clients with supporting document that were able to claim $4,000. So imagine someone claiming $4,000 and someone claiming $500. There's a difference of about $3,500. That is like equivalent to buying an Rsp of $3,500 impact on your taxable income. So what I tell my clients or every session is, don't settle for less. Don't use the flat method. Use detailed method. And the CRA says that for you to use the detailed method, you must get a copy of this document from your employer. I will advise you, note this form, T2200, get a copy from your employer so that you can claim the detailed method, because the $500 is nothing compared to people claiming $4,000, $3,000 with supporting documents. Now, trying to compare what you can claim as a salaried employee and what a business can claim in the work from home expenses. These are the list of items that the salaried employee can claim. One of them is maybe rent. But if you have your own home, your own mortgage, you cannot claim your mortgage interest as a salaried employee, because the government expects that your home will increase in value. You have 100% equity increase is yours, so they won't share in that. So for you to enjoy or claim work from home, then you must have a business that relates to your mortgage interest. Apart from these items that a salaried employee can claim, a business owner can claim business use of home expenses. If I have a business that I work from home, like maybe my incorporated business, practically I work from home, I can allocate the rental of my home, either mortgage interest, all other expenses used in maintaining my home, property tax, home insurance, repairs and utilities that relates to where I work from home even some capital renovations. Let's assume I work from the basement. I have to maybe fix a new AC, heating system in the basement where I work from for my personal business. I can claim all these items. Why someone that is a salaried employee cannot claim such. Also, as a business owner, you understand, you can claim vehicle expenses. All these items can be claimed: license, fuel, insurance, interest to borrow, to buy a motor vehicle, maintenance and repairs, leasing costs. Remember that a salaried employee cannot claim all this. So imagine a year I spend like $10,000 to maintain my vehicle, and maybe for business use, I drove my car 40% for business use. I can claim 40% of that 10K. That's like 4K, you understand, to reduce my business taxable income. Whereby someone that is a salaried employee is not using the 10K will be spent and you won't be able to recover it. But as a business owner, you understand, you have opportunity to recover some of your personal expenses through your business. For vehicle expenses, you can either use the full logbook approach. For every trip, you have the date, destination, purpose, and the number of kilometers driven. But we have some apps. The good news is that we have some apps like QuickBooks that you can use to track when you are leaving your house. It will ask you, is this for personal or business use? So you can use to track your movements. Then apart from that, if you have an incorporated business, you can either use this approach or use the automobile allowance rates, you understand, to claim use of vehicle. I have less than 10 minutes.
This is interesting. Keep going.
Okay. These are modern strategies people use to reduce their personal taxable income. So there are some sole proprietor business that the way they are structured, the business is structured to have a negative business income. So this is a typical scenario of one of my clients. Before we applied the business numbers, his refund was $4,000. You understand? But after applying the business, because of the nature of this business, this client has a negative business income of $7,250. He's a sole proprietor. So because of that, it will be added to his personal income tax. So because of that, the refund jumped by what? $5,300, because this person has a business and he has a business that is structured such that is negative. You understand? And some of this business structure, the salary is aware of it. That's why you have the required documentation. But someone that is a salaried employee, you might not be able to enjoy some of these benefits. As Ella said, the only thing that is certain in this part of the world is either debt or taxes. When you make money, you are taxed. When you spend money, you are taxed. When you save money, except in TFSA, you are taxed. Even when people die, they assume that your property that are not jointly owned, deemed disposition, CRO will assume that what's the capital gain of this property, and they will charge the person that inherited that property tax. That's why we need to ensure that we manage our taxes well. One of the strategies is Rsp Optimization. I have less than 7 minutes. Now, the Rsp tax year is different from the tax year. So the typical tax year is from January 1st to December 31st. But our Rsp tax year is from end of February. So for 2021 tax year, I can still contribute to my Rsp today, and it will still count in my 2021 taxes. You understand? So what the wealthy people do is that by now they will have simulated, based on my tax slip and my situation, what is my refund? They determine the refund. Now, what can I do to optimize my taxes using Rsp? So they simulate using contact their contact. If I buy 10,000 worth of Rsp, what will be the impact of my refund? If I buy 20,000, 30,000 worth of RSP. And that's why the government allows it, because now most companies will pay their bonus towards the end of February. So people can still even invest in RSP and it will impact their 2021 taxes. I have less than 5 minutes. So for example, this is my client. Towards the end of February, we did a simulation. His refund was 4,000. And based on the simulation, it was recommended that he should invest 15K in RSP, and his refund increased by 5,000, almost 6,000. Even if you don't have savings to fund this, the wealthy people can even borrow to invest in RSP, because at the end, you have the investment asset, which is RSP. Your investment asset will increase. You get additional refund from the government. You understand? So net is a positive decision if you use RSP to simulate your refund. We are all familiar with these people, the likes of Elon Musk and Jeff Bezos. These people, they earn millions of dollars of dividend income every year, and they don't pay tax on those dividend income. What do? They borrow to invest. They don't use their money to invest, because when they borrow to invest, the interest charge on borrowed funds will be used to reduce the dividend income. And based on what they borrow from most of the scenario, the interest will be more than the dividend income. So net-wise, because there's even dividend tax credit, the taxable income on most of their dividend income is zero. They are borrowing to invest. And this is a scenario of one of my clients last year that invested in stocks around 55K. He borrowed money, even using his line of credit at 6%. The dividend income he earned on the 50,000 worth of stocks is lower than the interest he's going to pay. Because of that, he earned free dividend income. He's not paying any tax. His investments in assets increase. You understand? And although some of us have the fear that the stock market will always crash, from history, even when the market is down, the market will always go up. So the message here is that we can also play in that market where the rich people are playing. You can borrow to invest in stocks, and you pay no taxable income on such income. Then another thing I would like to talk about is, as a sole proprietor, you can pay yourself salary, but it will not be allowed, in terms of it will not be used to reduce your business taxable income. All these items, if you donate to charity as a sole proprietor, or you pay interest on penalties, all these items will not be used to reduce your taxable income. Even if you pay yourself as a sole proprietor as salary, the government will disallow it. It will not be part of the deductions to reduce your taxable income. But this is one of the benefits of an incorporated business. You can pay yourself salary. There's always argument between dividend. Do I need to pay myself dividend or salary? They have pros and cons. Dividends, you get higher monthly net cash flow. Why? For salary, because there will be payroll tax that will be charged, CPP will be charged. You get a lower monthly net cash flow. Dividend comes with a lower effective tax rate, because there's also what we call dividend tax credits that will reduce the tax you're going to pay on dividend. But it's less beneficial if you want to engage the lenders compared to someone that's earning salary, because you won't have a pay stub to show for what you are earning. And it might lead to personal tax owing if you don't manage your tax well. I guess this is the last slide. This slide is the key message here is that if you have a small business, and according to the CRA law, you're a small business, you're not earning up to 30K in a quarter or in 4 consecutive quarters, you are not required to register for GST. But even if I have a business, a sole proprietor business, and my gross earnings even up to 30K, I can register for it and it will be beneficial. Like this one of my clients, the gross earnings is less than 30K and it will still register for GST. Because when you register for GST, when you collect GST for government, you also, when you pay on your purchases, on your payments, you can claim GST on those payments. So this particular client paid 26K out, and out of this 26K, he paid a GST of 3,300, and he was able to claim this from the government. Assuming this client is not registered for GST, he won't have this additional incremental cash flow. Okay, I guess that's the end of the presentation. I hope I was able to meet up with time.
Wow, you're just right on here, Seye. I'm short for, if I'm lost for words, if I might put it that way. Wow. I'm guessing this is the time where a lot of us have been, just waiting to maybe get more clarifications on what our speakers have kind of alluded to today. Thank you, Seye. Thank you, Tolu. I mean, I'm not sure Google would show us or let us know some of the things we've had on the call today. There are obviously things I'm sure, a lot of us would be doing very differently, this tax season, so that way we're maximizing the refunds we can get back from the government. Well, maybe I'm speaking for myself, but I know what I'm going to be doing differently this time around. I can see a couple of questions in the chat. I know, Tolu, you've been answering some of them, but I'm just going to go all the way up so we don't miss out on anybody's question. A note to everybody on the call, if we're not able to get to your questions, I'm going to drop an email shortly in the chat. Feel free to email that, feel free to send us an email. I will be happy to reply your inquiry. The first one I have here, Tolu or Seye, feel free to grab it, is does a spouse that is not working also count on the spousal amount? I don't know who asked that question, but maybe if you want to clarify.
Can I take that?
Okay.
I actually saw that question, but I wasn't able to really understand. So now this is how spousal amount works, right? First and foremost, your spouse must not be earning up to the threshold that is established. The threshold is usually the same as the basic personal amount. Don't worry yourself about knowing the exact threshold. Now, I'm going to use an example. So Temi right here is working, and let's assume that Temi's husband just came to Canada and is yet to work in 2020, which year we did now, sir?
2020.
So Temi's husband is yet to work in 2021, right? So Temi is going to claim basic personal amount. She's also going to claim spousal amount on her husband because it's considered that she is supporting the husband. Now let us look for another example. Okay, Temi is earning enough money, and let's assume the husband just came into Canada towards the end of the year and he had not really gotten the job he wanted. So he probably earned just $5,000 for the year. Now that $5,000 is not up to the threshold. The threshold is about 12,000 plus for this year. I'm not too sure again. So that $5,000 is not up to the threshold. Now what will happen? Temi is going to still claim spousal credit on her husband when she's filing her returns, but she's not going to be able to claim the maximum amount. She will claim, let's assume the maximum claimable is $12,000. Let's just assume. Now what Temi will be claiming is 12,000 minus 5,000 because the husband already earned 5,000. So she will claim now my mathematics is poor. She will claim 7,000 as spousal credit. Now, don't get it twisted. It's not the actual 7,000 that you will be using. You will still apply 15% to that 7,000. So it's going to be 7,000 times 15%. Is that 15%, whatever you get, that is going to be part of the credit. So the income of the spouse you are supporting must be lower than the threshold. The very moment the spouse's income reaches or exceeds the threshold, you cannot claim a spousal amount. and it can be claimed by either of the two spouses.
Wow. Thanks for clarifying that, Tolu. I'll move to the next question here. Mansell, you've got jokes. Let's see here. Okay, I think you already took Mansell's question here. Can donations be made to institutions outside Canada? I think you took that one. I saw the chat. Frank, not today, collect receipt from church. Oh, praise the Lord.
Yeah, so about that, collecting the receipts. I mean, in
Yeah.
case you're not aware, most of the religious organizations, they don't even need you to come and ask. They will prepare your receipts. It's not left for you to go and pick it up or not, right? But I always tell people, no be Nigeria we do. Everything that, I mean, God will not be vexing for you that you are collecting receipt for your tithes or whatever. Please collect your receipt. Use it, get some credits. If you feel guilty that you are getting back the money that you paid to God, take it, give it back again to the church. Continue the cycle.
Yeah, that's a good one. Thanks for shedding more light on that, Tolu. I think you answered Mansell's question again, something around if I transfer 10K to spouse who is not working.
I answered that.
Yeah, okay. So moving on here, please, is donation outside Canada acceptable? I think you answered that one, that is not acceptable, something like that.
No, donation outside Canada could be acceptable, but it has to be under the institutions that are accepted by the government. So if you go to the Canada Revenue website or the Government of Canada website, there are some international institutions that qualify as institutions you can donate to. Example is United Nations, UNICEF, and most charities that the Government of Canada donates to, that is outside the country, then you can also donate to it. So it's not, you can't just go to Nigeria and say you want to donate to Olushore Shesha Home. Yes, I understand the fact that they need donations too, but it's not part of the things listed as part of what you can on the Government of Canada website. It's on the website, you can find it.
Yeah, so something you just said there, I mean, when in doubt, check the website and confirm you're sending to the right.
It's not the friendliest of websites to check though, but it did here.
Yeah, awesome. Thanks for that, Tolu. Will I pay tax money on money borrowed from my Rsp for a mortgage? Interesting question.
So when you put funds in your Rrsp, anytime you are withdrawing from it, you are expected to be charged some taxes, but there are exceptions, and those exceptions are two. When you are taking money from your Rrsp to buy your first-time home, is it first time? I'm not sure if it's just first time, but when you are taking money from your Rsp to buy a home, or when you are taking more money from your Rsp to go to school and pay for your schooling. Now, what happens is you are expected to be, it's taken that you are taking a loan from your Rsp. So you are expected to be paying back every year or every year a certain amount of money or so. Now, the very year that you default, that year that you default, then you have to pay, you have to be charged taxes on the amounts that you defaulted on. It's a little technical, but yes, your answer is yes.
Okay, I hope that kind of answers that person's question. And then if you have a follow-up question, feel free to drop it in the chat. Hopefully we can get to that. I know, Tolu, while you were presenting, you had some, I think it's list of medical expenses or something like that. So there's a question around that. Do chiropractic, dental, and RMT costs after insurance payment qualify for medical expenses?
Most dental expenses qualify because they are not things that you can just go and to pick up off the counter, right? Chiropractic also qualifies, especially when they are prescribed, right? You can't just go to a masseur, waiting in a color now, masseurs have been a masseur, whatever. You guys know what I'm trying to say. You can't just go to the massage place and tell them your body is aching you, you need a massage, and you want to use that as a medical receipt. But let's assume your doctor prescribes to you that you need to see a chiropractor or a physio that needs to do some things for you. At that point, those medical expenses, the ones you pay out of pocket, not the ones that insurance has covered, the ones you pay out of pocket can qualify as a medical credit for your medical credit claims.
Okay, thanks for that, Tolu. Questions are just trooping in
So
here.
sorry,
but-
Olabode said dental isn't usually prescribed. I mean, dental is it is presumed to be prescribed. You can't just it's not something you can do for yourself, and it's not something somebody can do for you, right? So dental is part of your medical expenses.
Okay, I know we've got a lot of questions here. I'm just hoping we'll be able to cover most of them. Seye, please feel free to jump in or anytime. Just moving on here. Can moving to a new home act as a valid deduction? Anyone want to take that?
Can I take that? And I would drink water after this. So moving expenses. When you say moving to a new home, I mean, are you moving 42 kilometers? Are you moving for work purposes? Are you moving for schooling purposes? So you need to meet those two requirements. Is it up to 42 kilometers from your present location? The calculation is not that simple, but I'm just putting it that way. Is it up to 42 kilometers? That's number one. Number two, are you moving for schooling, or are you moving because you got another job? Now, some of those expenses that you get in moving to a new home can qualify. But if your question is, okay, I was staying in a condo before and I just bought my own house, still within the same city, Calgary, and I'm moving from my condo, from the rented condo to my own house, no, it does not qualify as a moving expense.
Yeah, to add to that, as I said by Tolu, moving expense can only be claimed if you are moving because of you want to move closer to your place of employment, either your former employer or a new employment, or because of school. So if, for example, now today, I move from Ontario to Calgary, and it's not because of a new job, I can't claim that. Because in the record, in the system, you're going to impute your old employment and the new employment and the address. You understand? And there's a way they can calculate that on the system in terms of even the kilometer. So you must only move for work or for school.
Wow. I was just going to ask who is watching or who is calculating, but you've just said that, Seye. Thanks for chiming in there. Another question here, is the tax slip the same as T4?
Yeah, T4 is one of the tax slips. We have so many tax slips.
Yeah. Okay. I hope that answered that person's question. Just scrolling through the chat here. Sorry, bear with me. I know Tolu has answered some of them, so I'm just trying to skip through so I don't maybe go over them again. Another one here, does moving from overseas to Canada count as moving expense?
Okay.
Anyone want to take that?
Can I just quickly chip in then if Seye has some? So now, if you are talking about the first time that you were moving from Nigeria to Canada as a new permanent resident, no, it does not qualify. That's why Canada told you that you should have at least $12,000, or is it $24,000, depending on your family size before moving. So that does not qualify. Now, let's assume that you were in Canada and for some reason you got an employment outside of Canada that is related to a Canadian company, right? Those kind of situations could be exempted and you will be able to claim moving expense, right? Because the spirit behind it is that whatever income you are getting from that Canadian company because you're working from abroad, one way or the other is still trickling back to the system, right? But just imagine you got tired of staying in Canada and you now got a job in Nigeria with the Federal Ministry of Finance. It has nothing to do with Canada, nothing, nobody sent you that work. You just go there and you want to claim moving expense. No, it's not claimable. So, so for you to be moving out of Canada to claim moving expense, it has to be justifiable. Now, if you are moving into Canada to claim moving expense. Let's assume you were working for a Canadian company abroad, and to a certain extent, after some time, you had to move back to Canada. And don't forget, it has to be related to work or schooling. You have to move back to Canada for work purposes. It can be considered. See, the truth about all these expenses is that you don't want to shine unnecessary light on yourself. Because if you are shining light that is unnecessary on yourself, the very first day you get audited by a CRA, you are likely to continue to be under the radar for a long time. So if it is something you don't need to claim, forget about it.
Yeah. No, thanks for, just speaking to that, Tolu. For the sake of time, like we have a lot of questions in here, but hopefully we'll be able to get at everything. Another one here is for first-time filers who have had most of their income outside Canada for the tax year, e.g. income from employment in Nigeria. Would they be liable to pay tax since tax was already paid in Nigeria? I'm guessing this is for like a first-time person in Canada. Anyone want to chime in?
Yeah, let me go for that. So when, as a first-time filer, so the system will want to capture the income earned before arriving in Canada. So, and the income earned after arriving in Canada. So the income you earned, maybe for example, in Nigeria will not be taxed. You understand? So you only be taxed on the income you earn in Canada, maybe for 3, 2, or 1 month while in Canada. Because the expectation is that you would have been taxed in those jurisdictions before arriving in Canada.
Awesome, thanks for taking that. Moving on here. Okay, so if I move to another location in Canada, as I probably change school, I can file those returns if they're up to 42 kilometers. I think you already answered that it has to be 42 or greater kind of kilometers. So,
yeah, so just to add a little to it, you have to be, the moving expense, you are going to be claiming it from the income you are making from the new job. So, and if you are moving for schooling, the moving expense, you have to be claiming it from possible income you are making from the school, not just a blanket income. Now, you ask me, which income will I be making from school? Maybe you are getting a bursary or a grant. You have to claim your moving expense only on that grant, not on other income. Yes.
Wow. Wow. So it's not even as easy as
it's not a blanket expense to claim. Now, if let's assume I had a job with Royal Bank of Canada from January to March, and I decided to leave Calgary and I went to Ontario and I got a job with the City of Ontario from April to December, my moving expenses can only be claimed on the income that I made from City of Ontario.
Okay, for the sake of time, sorry, I'm just going to breeze through this like super fast. Another question here. I'm guessing, Seye, this one might be for you just because it's related to business. So someone is asking, is it advisable for me to be incorporated rather than a sole proprietorship? From a tax perspective, what would you recommend?
Yeah, so it depends on the net profit. If the net profit is maybe around 5K, around 10K, you can still manage, because normally your personal income tax rate is greater than the business tax rate. So if the net profit is around 10K, you can still manage it in your personal income tax. But when it's more than 10K, you understand, it's advisable to get your business incorporated. And to flip it, the best strategy is, if you have a business, have a sole proprietor business, have an incorporated business. That's the best way to optimize your taxes using your business.
Wow, thanks for clarifying that. Another question here, just in the chat: can I claim expense deduction made to my underage kids for cleaning my Airbnb business? This person is a Niger parent, obviously.
So, well, I mean, there's really nothing stopping you from doing that. But the question is, did you actually pay that? He said undergrad, not underage. Did you actually?
Underage, yeah.
Oh, is it underage or undergrad?
Underage, no, underage. kids.
Oh, underage. Well, Seye, do you want to take that?
Yeah, let me come here. So the law or practice allow people, you understand? So let's assume I have a 10-year-old girl, you understand? And it helps me in managing the business, maybe cleaning, arranging files. Yeah, I can pay that person's salary to reduce the business taxable income. But I must be able to show proof when salary comes calling. Proof in the sense that proof that I moved the money, I deposited the money into my child account. Because when they come calling, that's the proof you want to show. But in terms of practice, I can tell you that an average Canadian that has a business, you understand, that has children that are over 10, 15-year-old, do that in this Canada. In practice-wise, is allowed, but you must be able to show proof that it was paid.
Yeah, thanks for that. Another question here is, can I contribute more than my Rsp limit? If yes, I hope all is well, like you're not going over any rule. What do you have to say to that?
Okay, for Rsp limit, that's why it is called a limit, right? If you contribute more than the limit, you pay some charges. Although there is still some allowable,
Plus 2K.
Something plus 2K, yeah. You're allowed to try yourself using local palace. You're allowed to try yourself a little with just like 2K. But if you are trying yourself more than that, you start paying charges. But again, why do you want to do that?
Yeah, interesting. Moving along, we have another one here. Chinedu is asking, as a follow-up, expenses not claimed from previous years, can I claim those past expense for the current tax year?
Expenses like what, please?
Yeah, Chinedu, if you're on the call, if you want to mute yourself to maybe clarify that question, you have a minute to do that.
So hi, Chinedu here. So it's expense due to cleaning my Airbnb, and you're right, I have been paying into my child's Rsp, right? So I was wondering if that could sort of act as an evidence for that payment. So I do have a track record where I pay in a certain amount every month. And of course, she helps me with cleaning the Airbnb space. So I was wondering if that could be classified as a cleaning expense to the Airbnb. Thank you.
Thanks for clarifying.
That's tricky because let's assume you don't have Airbnb business. Let's assume there is no Airbnb business. Will you still be contributing to the Rsp? Do you understand? That's why it's tricky.
Okay, that's a valid point. I just wanted to see if that's a possibility, because I've heard you can pay your underage child for as long as you have proof of it, but you're right. Either ways, with or without the Airbnb, I will still make those contributions, but I was wondering if that would be an eligible expense, right? So
Okay, sorry, go ahead.
Yeah, so what I would just add to that is, apart from the Rsp, except you also want to maybe open a TFSA for the underage and be paying into that, or another savings account for the underage to be paying into that. But because it's Rsp, it's more of like a recurrent, like mostly fixed amount. So that's why it's tricky.
Good point. Thank you.
Yep. Tolu, you wanted to add something to that?
Yeah, so I mean, if it's not your child, you will still pay somebody to clean the place, right? So the question now is that you're wondering whether paying your child for cleaning can be allowable or allowed as an expense. Now, just as Seye said, I mean, you're going to pay for someone to clean this place, whether you like it or not. Who is collecting the money is not really what is important. But now, if at the end of the day, you are paying something that is outrageous, that is when the CRA will now start shining their torchlight on you. Maybe cleaning is $20 per week and you are paying like $150 per week. Now, if you are paying a real person that is at arm's length to you and you are showing proof of the payment, nobody is going to worry. But if you are now, if it is now, because if it is now discovered that you are not paying somebody at arm's length, you are paying your child. Now, that is where the torchlight will now come, that, okay, there is some hanky-panky going on here. Something that is worth $20, you are paying $150 because the income is still circulating within the family and you are trying to, you get what I mean?
Yeah.
Yeah.
Thank you for, just, adding more to what Shaya said there. Yeah, we're way past time here. I'm just doing my time check here. And it looks as if we've gone 5 minutes over. I know there are so many questions that are just
sorry to cut in before you go on. I saw a question that just was staring me in the face. For some reason, you've not got into it and it caught my interest. I don't know if you can just spare me 30 seconds.
30 seconds.
30 seconds, trust me.
Okay.
It's about somebody saying that he got a contract and they told him that he's an independent contractor and he's not being charged taxes at source. What it simply means is that you are self-employed. So you have to find a way to make sure that you report your taxes appropriately. At the end of the day, you are likely going to become an installmental payments client with the CRA because your withholding taxes are not being taken by whoever is paying you. But because you're an independent contractor, that makes you a self-employed person. Did I make the 30 seconds? I did try with time.
Although you always like to go over, but it's allowed, right? And then just to be fair, I see one hand up I can see somebody raising his or her hand up. We'll just take that question quickly and then maybe we just, take a group photo before we all run off on the call today. Opsi, if you want to unmute yourself, go ahead with your question. You've got a minute.
Okay, thank you so much. My question is that are cryptocurrency trades taxable in Canada? Like when we want to sell cryptocurrencies, is it taxable in Canada? Do you have to report it?
30 seconds, please.
Okay, so cryptos, it's a very new industry, but as at the last tax year, I worked for an organization, I won't mention the name, last tax year so that it doesn't look as if I'm promoting them here. The way the cryptos were treated, they were treated just like stock exchange. Like you trading stocks, that's how they were treated. It's not the crypto itself that is the problem, it's the fact that you are making an income from trading crypto. So it is the income that you are making, the value that you're adding to yourself. That is what CRA is after.
Okay, thank you so much.
Awesome, thank you. We're really at time now.
Sorry, there's one important question that was not answered. It's in the chat about couples, filing tax together. So that one is very important.
Oh, okay. I tried answering that with a chat. Maybe I didn't get it. Now, every individual has to file their taxes as an individual. So forget the fact that you are a couple. The only thing you do is you file under a family name as a couple. So Mr. and Mrs. Ade, Mr. Ade and Mr. Ade Okoro and Miss Chioma Okoro are couples. Now, Mr. Ade will file his own tax returns under his name as Mr. Ade, and Mrs. Chioma Okoro, who is Mr. Ade's wife, will also file her own taxes under her own name as Chioma. Now, what happens is that they are filing under a family umbrella. It doesn't mean that they are filing their taxes together. They're filing under a family umbrella. And the reason now is if there are credits that are movable within spouses, then you can be able to pass them along. So you are going, everybody they bear in Papa name, you report your own income separately. Your husband or your wife will also report his or her own income separately, and you'll be charged based on what you earned. Now, filing, when they say name of spouse, name of this, the main essence is for the transfer of credits, right? Within the spouses, like the spousal amounts that I mentioned about, right? Things like that, but it's everybody carry your own cross when it comes to taxes.
Yeah, I think to add to that, I understand the perspective of the person that asked that question. You know, filing together in the sense that, are they using the same accountant? Are they using the same software? They are combining their data, do you understand, together. Now, you know, there is a perspective that is advisable to file separately, that you get more credits or you get more refund. Do you understand? When you are filing your taxes separately, what you just need, the information you need from your spouse return is the net income. But it's recommended that for you to maximize your credits, you should file together. Now, for those that are advising that you should file separately, maybe use a different accountant or use a different software. To be sincere, from experience, they are trying to manipulate the system. So it's either they are claiming a credit. So imagine now, some people will file separately and also claim eligible dependent for their child. And the person has a spouse and is claiming eligible, which is wrong. So people that are encouraging us to file separately, you understand, is either they are trying to manipulate your tax record, and the CIA is after for such people. So it's recommended, let's file together.
Okay.
To maximize your credits.
So don't get
sorry,
twisted.
Tolu,
When it says
sorry,
file
we
together,
need to be
no,
mindful
we will
of
go.
time.
When it says file together, it means you're filing under the same family name, but everybody will still do their taxes individually.
Okay, thanks for that. Remy, are you ready for us? Sorry, if we all don't mind, we would like to, we would appreciate if you can maybe just put on your camera or enable your camera. It would be nice to see everyone's beautiful face or faces. Remy, are you all set for us? Maybe we can just take a group photo before we run off, if that's okay. Wow. I'm seeing cameras just come up. That's good. Let's keep them coming. Let's keep them coming. Remy, are you all set for us?
Just waiting for others to put on their cameras.
Okay. Give them 30 seconds. Do we have a good number?
Not a good number, but we can manage it.
Say
So,
cheese.
are we ready?
Yeah.
Yeah, let's go. Please hold on one more.
Should have told us change your style.
No, people are sending messages and it's blocking.
Oh, okay.
Oh.
I don't want to take it with message on. Yeah, let's go now.
I mean, my chin is paining me.
Yeah, we're good to go. Yeah, we're good. We're good now.
Hey, thank you all for joining today's session. Ewan, did you post our link? Please try and follow us on LinkedIn. And then if you're not yet a member, Ugo just posted a link. Feel free to click on that link to join our association. And then, yep, see everybody next month. I hope we all have a good evening. Thank you for joining today's session, and yep, enjoy your evening.
And
Bye.
thank you for inviting me also.
Thank you, Tolu. Thank you, Seye.
Thank you. Good
Bye.
night.
Bye.
Thank you
Bye.
so much. Great presentations.
Thank you.
Awesome.